Wondering whether to rent or buy a home in 2025? With the housing market constantly shifting and financial factors evolving, making the right choice can feel overwhelming. In this video, we'll break down a full financial comparison between renting and buying, helping you weigh costs, benefits, and long-term impacts. By the end, you'll have a clearer picture to decide what fits your budget and lifestyle best in 2025. Let's dive in. Today we will talk about should you rent or buy a home in 2025? Full financial comparison. So before we start, make sure to hit the like button and subscribe to my channel. 1. The rent versus buy dilemma in 2025. Deciding whether to rent or buy a home is one of the biggest financial choices many people face. In 2025, this decision is shaped by a complex mix of factors, including fluctuating interest rates, housing market trends, inflation, and personal circumstances. Buying a home often feels like a milestone, offering stability and the potential for building equity. Renting, however, provides flexibility and avoids many upfront costs and ongoing maintenance responsibilities. This article breaks down the financial elements you need to weigh to decide which option suits your goals and budget best in today's environment. 2. Upfront costs: what you pay initially. Buying a home typically requires a significant upfront investment, including a down payment, usually 5 to 20% of the purchase price. Closing costs, 2 to 5%, inspection fees, and moving expenses. These initial costs can total tens of thousands of dollars depending on your market. Renters generally face lower upfront expenses, primarily a security deposit and first month's rent. While this makes renting more accessible, it also means renters build no equity. Evaluating your savings and liquidity is crucial since tying up money in a down payment impacts your financial flexibility for emergencies or investments. 3. Monthly expenses: mortgage versus rent payments. Monthly costs for homeowners include mortgage payments, principal and interest, property taxes, homeowners insurance, and often private mortgage insurance (B&I), if the down payment is under 20%. Maintenance and utilities can add hundreds monthly. Renters usually pay just rent and utilities, sometimes with fewer responsibilities for repairs. In 2025, mortgage rates have shifted somewhat higher compared to recent years, pushing monthly payments up. However, rent increases in many markets are also accelerating, narrowing the cost difference. Calculating the true monthly cost of homeownership versus rent requires careful attention to all these elements. 4. Building equity and wealth through homeownership. One of the biggest financial benefits of buying a home is the potential to build equity, the portion of the home's value that you truly own. With each mortgage payment, you reduce your loan balance, and if the property appreciates, your equity grows. Over time, this can translate into substantial wealth and borrowing power for future needs like home improvements or education. Renters, conversely, do not build equity. Their monthly payments contribute to their landlord's investment. However, equity growth is not guaranteed. Market downturns can reduce home values, sometimes leaving owners underwater on their mortgages. 5. Flexibility and mobility considerations. Renting offers greater flexibility, especially if your career or lifestyle requires moving frequently. Lease terms are generally shorter and breaking a lease can be simpler than selling a home. Homeowners face higher transaction costs and time delays when selling property, which can be a financial risk if you need to relocate quickly. In 2025, the housing market varies widely by region. Some areas see strong demand and quick sales, while others are slower. If you anticipate major life changes within the next few years, renting might be financially safer to avoid loss on a rushed sale. 6. Tax implications and incentives in 2025. Homeowners benefit from various tax deductions including mortgage interest and property taxes, which can reduce taxable income. However, recent tax law changes have capped some deductions, and standard deductions have increased, making itemizing less common. Renters typically receive no direct tax benefits from their housing payments, though some jurisdictions offer renter credits or rebates. Additionally, first-time homebuyer programs and incentives remain available in some states to reduce buying costs. Understanding your local tax code and consulting a tax professional helps quantify the true after-tax cost of owning versus renting. 7. Long-term cost appreciation and inflation hedge. Homes historically serve as a hedge against inflation because property values and rents tend to rise with or above inflation rates over time. Owning a home with a fixed-rate mortgage locks in your principal and interest payments, providing payment stability even as costs elsewhere rise. Renters, however, face rent hikes typically tied to inflation or market demand. In 2025, inflation pressures remain elevated globally, which can accelerate both home price appreciation and rent growth. Analyzing regional market trends is critical to understanding if buying protects you financially or if renting and investing your savings elsewhere might yield better returns. 8. Hidden and variable costs to consider. Both renting and buying come with less obvious expenses. Homeowners must budget for maintenance, repairs, HOA fees, and potential major renovations, which can be unpredictable and costly. Renters may face rent increases, security deposit losses, or stricter lease terms. Insurance requirements differ. Homeowners pay for comprehensive policies, while renters need renter's insurance, much cheaper but offers less protection. Understanding and planning for these hidden costs prevents unpleasant surprises that impact your financial well-being. 9. Financial decision framework for 2025. To decide whether to rent or buy in 2025, start by assessing your financial readiness, time horizon, and lifestyle needs. Use online calculators to compare total cost of ownership versus renting over your expected stay length. Consider current mortgage rates, housing market conditions in your area, and your ability to handle upfront costs and maintenance. Factor in tax implications, equity potential, and flexibility requirements. Ultimately, the right choice depends on balancing financial prudence with personal goals, whether that's building home equity, preserving mobility, or maximizing cash flow. Consulting with real estate and financial advisors can provide tailored insights to make the best decision for your unique situation. 10. Psychological and emotional factors in renting versus buying. Beyond the financial considerations, the emotional and psychological impact of renting versus buying a home plays a significant role in decision-making. Owning a home often brings a sense of stability, pride, and control over your living environment. You can customize, renovate, and truly make the space your own without needing landlord approval. This emotional attachment can improve quality of life and provide long-term satisfaction. On the other hand, renting offers freedom from property maintenance, fewer responsibilities, and less financial risk if the housing market declines. Renters can often afford to explore different neighborhoods or lifestyles without the commitment of homeownership. 11. Impact of technology and remote work on housing choices. The rise of remote work and digital nomad lifestyles continues to reshape housing priorities in 2025. With many people no longer tied to commuting, location flexibility has increased demand in suburban and rural areas, sometimes changing cost dynamics and making buying outside major cities more attractive. Tools like virtual tours, online mortgage applications, and ad-driven home valuation models have simplified both buying and renting processes, empowering consumers with more information and convenience. If you like this video and would like to see more like it, please give it the thumbs up. Leave a comment and click the button to subscribe.